Good morning. This is a 5-year chart of oil prices, and the high point there in 2022 was when Western countries put sanctions on the exports of Russian energy. The conventional wisdom at the time was that these prices would stay high. This forecast is from June 2022, and it is typical of what mainstream economists and policymakers and investment banks believed. Barclays is a London bank, and they forecast far higher levels for crude oil going forward. Brent is the European benchmark for crude oil, and their prediction was for $111 per barrel for 2022 and 2023. That did not happen. Crude prices have not gotten even close to $100 since 2022, just a steady ride down. Those lower prices are impacting the American economy in some weird ways. Politicians lose elections if gasoline prices go up, but if oil prices go down, then oil drillers don't bother looking for more supplies. Falling prices means that oil companies are shutting down oil rigs. In the United States, the active rig count is the lowest in over 4 years. Revenue per barrel is falling, so American operators are taking the money and buying back stock or paying down debt. U.S. drillers need oil prices of at least $60 a barrel to drill new wells. And in most formations, the price needs to be at least $70. What's more, oil companies must expect that those high prices will last a long time, otherwise they won't get their initial investments back. Russia, Iran, and China are the 3 reasons why all the smart people were wrong about oil prices. In the case of Russia, the sanctions simply redirected their energy exports away from the European Union and toward everybody else. This chart shows Russian exports by region from 2021 through 2024. 2021 was the full year before the war in Ukraine and the sanctions, and Russian oil exports were just under 8 million barrels per day. In 2024, Russian oil exports were 7.5 million barrels, slightly below exports from 2021 then. But this is one reason everyone got everything wrong. Light blue, bottom bar, is Russian crude exports to the European Union. 3.5 million barrels per day to 400,000. And analysts assume that Russia's economy would slow dramatically or collapse completely when all that European demand went away. But all it did was move. China is in dark green, and Chinese exports of Russian crude did increase. India is in yellow, and India went from almost nothing at all in 2021 to 1.9 million barrels a day. Turkey increased their exports by over 4 times. Same for Africa in purple, up 4 times in 4 years. When we break out the Russian export data by country, we can see what happened. These are Russian fossil fuel exports of all kinds over a 3-year period from the date of the EU sanctions through the end of May. The European Union continues to be the top buyers of Russian natural gas, both liquefied and pipeline. But Europe dropped to number 3 on crude oil, and for oil products don't show up at all. Who are all these countries who are now buying the Russian energy? The BRICS countries. And how are they doing all that trade if Russia's been frozen out of SWIFT and Western banking systems? They built their own system. Here's a handy timeline. In late 2022, price caps on Russian energy, they were redundant because prices were falling anyway. Then came the sanctions against tanker companies that were shipping the Russian oil. None of it mattered. These data are from 2015 and show the cost of oil production by country. Again, this is all 10 years old and the costs are higher now, especially in US dollar terms. But there's Russia near the bottom at $17.20. American oil companies won't dig new holes unless prices are north of 60, but the Russians can make money at much lower prices. And so Russia has become the supplier for all their oil business that used to go to Europe. Right under Russia is Iran at just $12.60 a barrel. There are heavy sanctions against Iranian energy too, and those haven't made a difference either. Last year, Iran's oil production reached the highest level since 1978. And in 2025, they'll probably produce even more. Iran made $78 billion in oil revenues in 2024, over 4 times what they did in 2020. They're making money on everything: crude, natural gas, condensates. During the war last month, the Israelis didn't do much damage to Iran's oil industry, which was quickly repaired and production resumed. Our experts didn't know that at the time, of course. There was a big oil price spike there because investors actually believed that the Iranian government might fall apart, or short of that, do something desperate. If Iran were to close access to the Persian Gulf, it would drive oil prices a lot higher. The Strait of Hormuz is a narrow waterway, and Iran sits right on top of it and could close it, along with a big chunk of the world's oil trade. Goldman Sachs: Brent oil could go to $110 a barrel if Iran closed the strait, a 30% move up from that day's trading price. But that didn't happen because Iran would be crazy to close the Strait of Hormuz. They're making more money than ever. It's the Israelis who would love to close it if they could. 90% of Iran's oil comes here to China, and now Iran wants to use some of that money to buy a new air force from China. Except for officials in Brussels and Tel Aviv and some companies in the American oil patch, most people in most places are very satisfied with the way things are right now. Oil prices are going lower, which means lower inflation. China, India, the BRICS, and the emerging economies are happy to buy oil that would otherwise have gone to Europe for lower prices. Russia and Iran are making lots of money even at lower prices because their cost of production is so low. That is all happening on the supply side. But another key driver of these lower prices is demand destruction, and that's all coming from China. Gasoline demand is just grinding lower sharply as a result of China's electric vehicle boom. China is the world's biggest car market, and most of the cars sold here are electrics and hybrids. Every time a Chinese electric vehicle is sold, both here and across the world, it's a hit to future oil demand. Chinese families buy millions of new cars a year, but this line, gasoline demand, it just keeps dropping, like all the others. This is Xingping in Shanxi. Be good.
Give us this day our daily bread, and forgive us our debts, as we forgive our debtors. Lead us not into temptation, but deliver us from evil. For thine is the kingdom, and the power, and the glory forever. Amen. Father, thank you for this precious brother who has come. Thank you for making him a man of integrity and honor and wisdom. Thank you for making him a brother. Empower him. Fill him with your Holy Spirit. Give him gifts of wisdom or of prophecy.